Good morning. A slightly smarter morning market update for you for the 6th of February. So look, the headlines are that stock markets are all over the show. Massive sell-offs across the board. Volatility is expected today. Wage data is driving inflationary fears, and the dollar rally breaks strong support levels both against sterling and the euro. Yesterday, the Dow Jones sold off more than 4.5%. It was one of the biggest single-day falls on record, and the trend is continuing both over in Asia and indeed at the UK Open. So what's going on in Stockland? Well, it all stems from the non-farm payrolls on Friday, which not only took my money in the sweepstake, it also saw a good surge in the rate of wage increases, moving from 2.5% in December all the way through to 2.9% in January. When expectation was for 2.6%, that was a big deal. But why does this matter? Well, wage growth is inflationary. It's an inflationary pressure, and to combat that, obviously, the central banks are looking to increase their interest rates. So that leads to the doom mongers calling for perhaps an end to the age of cheap money that has been awash for so long. The rate tightening cycle that is the antidote to this has already started. The FOMC is raising, the Bank of England is raising, the ECB is likely to follow suit in due course. Early January, the FOMC was carded for 3 rate hikes this year. That's already grown in the eyes of the market to at least 4. And bear in mind, this is before the new Fed Chair Powell has even got his feet under the desk, really. So look, risk appetite fell yesterday, stocks sold off across the board, and there's an associated flight to safety where the hot money moves into the dollar, driving the dollar higher, and obviously the dollar benefited significantly. The dollar index rose to a recent high, and it pushed both sterling and euro through major support levels. We'll put all the exact details in the comments below. So what does that mean for the UK? Well, since Friday, since the pre-non-farm high, sterling's actually fallen 2.2% against the dollar since Friday. Mainly driven by dollar strength, obviously. However, the sterling has also dropped by about 1.75% against the euro since Thursday. So perhaps my sweepstake loss was the catalyst to the long overdue correction. It's just a theory. I'm not entirely sure how far the reach of this market update is. However, more likely it's a combination of the non-farms acting as a catalyst, the premature calls for a UK rate hike in May, fears over Brexit, and indeed poor UK data, lending to some even playing the recession card again prematurely in my mind, but all fueling fears of a slowdown. Traders, of course, are not shy about jumping on positions like this, shorting the market, and then, importantly, talking up their book, hence the doom mongers coming out to play. It's not quite fake news, but it does tend to exaggerate the short-term effects of any move like this. We'll keep you posted, but expect a pretty choppy day ahead. I'm FX Blue. This is CurrencyTransfer.com.